last May, I think it was, we had ADR 20, which was basically kind of setting out, Rujira having what they get for app, like um, laying it out Rujira's responsibility or Rujira's role in the app layer.
Yeah, it was quite
And
retrospective, really, wasn't it? Because we'd sort of kicked things off in the August before that, and but without any formal process and sort of JP driven, wasn't it? Really?
yeah. And then ADR basically had like a kind of like a 1 year timeline on it. And that's up now. So then we did ADR 31, almost like rolling over the contract in a sense, like just making sure we're all on the same page, things are moving forward together. It seems like they are. So like nothing is functionally really changed with app layer. We're just reassuring everyone the deal is still the same. That you guys, whatever you're creating, Rujira is creating it, and you get 50%. THORChain gets 50%, and you guys can keep pushing forward with what you've been doing. Um, is there anything else you want to add to that? Did I summarize it well, or is it?
Yeah, that's it, really, isn't it? I think
Yeah,
we're kind of we've had bear market vibes now for the longest time, and you see these other teams and protocols and companies dropping out in space. Even the kind of big established guys that you didn't think were going to go anywhere, and suddenly they're just sort of packing up shop and disappearing. So being able to come together and solidify the relationship and have this sort of cohesive unit, this cohesive team, cohesive community moving forward together, I think it's just it's THORChain has survived the years, and the Kuji and Rujira community have survived the years, and I think that it creates a really powerful and strong foundation for what we do going forward now.
nice. So what can we look forward to next then? We got that out of
So,
the way. Like what, yeah, what are you guys working on? What's like what, yeah.
well, the sort of the high level roadmap is to get to kind of having fully decentralized, permissionless, open source perps. And there are a couple of steps needed to get there. Namely an extension to our automated market maker. So you can create, we call it CCL, which allows you to create liquidity within a range of say units or big three. And then on top of that, we will build a more sophisticated automated market making protocol called DCL, which uses Oracle prices. And PM will go into this in much more detail. But that is a prerequisite because that's the kind of AMM strategy that you'll want to deploy if you want to deploy liquidity into a perps market. If you're not a sophisticated market maker, you can't be there writing bots and having them replace orders. So that's the prerequisite to that. But then we'll roll out perps, and it's a new model of perps which doesn't most part it doesn't have a funding rate. Is the bottom line. Every other perps market is sort of it's isolated and siloed, right? They Hyperliquid or whoever, they build perps first and then they introduce spot markets afterwards. Whereas we come at this from the opposite direction, and so instead of relying on third party funding rate arbitrage to stabilize the price of your perps market, we'll have basically what's called funding markets, where you cash out your winnings in perps USDC into real USDC. And as those markets dislocate, it's the equivalent of a funding rate on a perps market. And all of that volume, so people cashing in, cashing out, winning, losing, all that activity, which is typically 10 times the volume that you see on spot, is going to be stabilized by the spot market through THORChain and stabilized by the flows through THORChain, which is quite new and quite unique, I think.
When did you come up with this? This.
It's been it's been a long process. We were gonna ship perps on Rujira, and I kind of looked at these models and comparable protocols, and they all live. They're designed to live in a bubble. They're designed to like kind of live on the chain on their own and stabilize themselves through Oracle feeds and funding rates, and rely on third party arbitragers to arbitrage that funding rate to keep the perps market fixed. And it just didn't sit right with me. I said, that's, there's a broader macroeconomic ecosystem at play here, which there must be a way to reduce this to its core components. And what are people actually trying to achieve here? And how do we reduce this? And in amongst everything that's happened over the years, and having to day-to-day shift features and fight fires and deal with whatever. That question sat there, and I didn't really have an opportunity to answer it. So there've been kind of a few kind of moments over the last 6-12 months that went, oh, that's a nice step forward, and that's a nice step forward. But yeah, we've managed to basically completely reduce this to just basically like a synthetic stablecoin protocol. So a stablecoin is in effect a perp. You're minting some tokenized in the case of stablecoin, you're minting a tokenized long position, right? Because you don't want to sell your Bitcoin, so you want to mint some whatever it is, like some decentralized stablecoin off using your Bitcoin as collateral. Whereas if you're short, you just sell your Bitcoin. And so you do that the opposite way around, and you allow someone to mint a stablecoin that's pegged against Bitcoin, and they use real dollars as collateral instead. And now suddenly someone's got synthetic dollars and somebody else has got synthetic Bitcoin, and they can just trade with each other. It's just an asset, the same as any other secured asset on THORChain, except you can't withdraw it to the native asset, right? It's not like synthetic Bitcoin, perp Bitcoin is just something that exists inside the Rujira perps platform. And the only way you cash it out is you cash it out, on these funding markets. So I can cash out my perp Bitcoin if I've got more of it through a successful short. I can cash it out through a Bitcoin perp Bitcoin funding market, which is just a trading pair like we have everywhere. And you swap that to Bitcoin, and you now have profited Bitcoin from your perps trade.
It's pretty wild, man.
So no more blank faces, sorry.
Yeah, no, I had no idea you guys are working on this. Well, how does Rujira make money? How does THORChain make money on this then?
So the thing
There's
with
no
perps,
funding rate.
you don't have to have spot, like you give somebody a 10x leverage on. So I deposit 1 Bitcoin. Right? I want to go long on whatever, but I want Bitcoin to be my collateral. I can deposit 1 Bitcoin and I can mint 10 more. And so now I've got 10 times my assets that I can now trade on these perps markets. So suddenly, you 10x the amount of liquidity that you have, because it's all synthetic and it's all 90%. What you're trading is synthetic. It's backed by real collateral. We have to make sure we've got the right checks and balances and constraints and controls in place that ensure that you don't get sort of like massive bank runs. But this is also another nice feature of the way that we designed this, is that in a kind of traditional perps design, I've just profited $1,000 on my trade, and something like DYDX or Hybrid, whatever, like they're denominated, and you have to cash out into USDC, and so internally, it's valuing the profit on your position, and you put it out, and then once you withdraw it, it sells that kind of internal representation of USDC, your synthetic USDC, sells it for real USDC and lets you withdraw it, which creates a dislocation between your perps market price and your spot market price, and that's what drives your funding rate and all that kind of stuff. Whereas because we at a structural level, this perps product will have you'll be able to hold like perp USDC in your wallet, should you so choose, right? So like the funding market might be not in your favor. It might be, trading at like 98 cents or whatever. And so you take a 2% haircut if you cashed out your winning position now, or instead you can just cash out to perp USDC and it can sit in your wallet, and you can then use that for a short. If you just won a whole load of perp USDC on a long and you think, oh, market's about to turn now, I can just rotate that winnings into collateral for my short without having to pull it out and without having to take a haircut, without having to pay funding rate. So yeah, it's quite like I think it's quite a flexible and powerful design, and we'll wrap it up in nice simple UI so that so it's sort of I guess this is going to be something else for integrators to look at. The integrators can wrap these primitives up in however they like, and present this perps market and however they like. They can completely hide the fact that there is this intermediary funding market, and they can just present it like a standard. I'm going to open a long position, I'm going to open a short position, and then we cash out to USDC, and I'm going to win or lose. Or they can, create more sophisticated products where you have all the credit features that we have currently, where you have multi-collateral positions. We will eventually have LP positions available as collateral, and you can borrow or you want borrow spot assets against them, or once perps goes live, you'll be able to mint perp assets against them. And so the flexibility there is just, like it's not something that you would expect most people to sort of sit and practically get their head around and use it directly, but it gives you the ability for UIs and front ends to package this up however they like and however they think their users might like. You could create a delta neutral package to allow somebody to borrow against sort of a stable Bitcoin package because half it's long, half it's short. So you don't get liquidated, but it's not because it's not through like funny financial accounting. It's because you found somebody that is going to take both sides of that position, and you're just going to borrow against it.
So how long do you think this will take to roll out?
So DCL is half done. I'm just waiting for PM to refine his algorithm for it. And then the only other piece we need is what's called a mint vault. So at the moment we've got lending vaults where people deposit their spot assets based on the amount of them, utilization, right? Same as Aave, same as all the lending protocols. The utilization ratio of that vault determines the interest rate to try and keep the vault levels at a sensible level. We obviously, so we don't create a mint vault, which doesn't have a deposit side. So you just say, I'm going to allow anybody to borrow from this vault as long as the borrowing is over collateralized. But the mint is only capped at a certain level. And then we have to, the interest rate on that synthetic asset is determined, and this is the TBC, it's determined by some combination of utilization and perp market prices and all that kind of stuff. So this is the configuration of that is a question mark, but there's one contract left to go, and then it's a deployment issue, deployment in UI.
Yeah. So just to give a bit of expectation managing, yeah, it will be also a lot of UI work required, but also liquidity. And that's why one of the things we got with the ADR31 is a POL. And that will be very important. And that's also why we need to go in steps. First, nail the spot market, because there we have the THORChain flow via the virtualization strategies that help us monetize the app layer a bit. That will in turn allow us to get to increase revenue and use a share of this revenue for protocol and liquidity to bootstrap those perps market, because they are gonna, for those one, we won't have access to THORChain liquidity because it's there is no perp market on THORChain, so we'll have to bootstrap from scratch, and it's gonna require quite a bit of capital. So I think we need to do a rollout, a progressive rollout, market by market, like really seeding things with decent liquidity, and you will be able to use both CCL, so fixed range, and DCL, this new strategy using dynamic oracles. And here, again, it's very important to have DCL because we don't have the virtualization strategy. Otherwise, we don't have any mechanism that keeps the price moving along with the market. And that creates this recurring flow based on the liquidity you have at work. So that's really some important caveats to keep in mind, but yeah, the pieces are getting very nicely aligned. And you were asking about the economics of all that. The beauty is it's all integrated into the ecosystem. So the trading will happen on Rujira, Fin, our order books exchange. It will be just a different kind of market, actually two different kind of markets. Some will be those funding markets, which will be a mix of perps token, minted perps token, and the native corresponding assets. So BTC, perp BTC, for example, and you will have like a delta neutral or pseudo delta neutral strategy where you can provide liquidity in this market for people to cash in and out. And this will be all the volumes there will be charged the same fee and the same arbitrage profit when there is an overlap between different liquidity sources between CCL and DCL, and that's flow as protocol revenue, which is shared between THORChain and Rujira. and then you will have the perps market, which will just be a combination of markets made of two synthetic assets, and all of that trading on the same order book DEX and with the same economic model with two sources of revenue: the trading fee on one hand, and the arbitrage profit whenever liquidity between the two different sources overlap.